Two mildly encouraging words were used by a group of economists to describe what next year may bring: stable and moderate. That's the 2013 outlook from the National Association of Business Economics. The organization figures the U.S. economy will grow 2.1% next year, driven by housing and construction, but with corporate profit growth slowing down. Nayantara Hensel is the chairman of that group, the National Association for Business Economics. She joins us from a Washington, D.C. bureau. Not bad, moderate, stable, but certainly not robust here, is it?
No, that's absolutely right, Tom. Basically, again, we're forecasting annual average real GDP growth at about 2.1%. But the good news is that we do expect it to accelerate during the course of the year, perhaps reaching about 3% by the fourth quarter of 2013.
What's going to add to that growth, considering, in other words, is it being held back in the first 6 months because of all the uncertainty over the fiscal cliff?
Absolutely. In fact, if you take a look at the panelists' forecasts on a quarterly basis, they suggest that real GDP growth will be about 1.8% in the first quarter of 2013, but it'll jump by the second quarter of 2013 to about 2.4%. I think some of that is definitely being held back by a lot of the concerns that resolution is important of the tax and the spending plans. And about 90% of our panelists forecast that sequestration will be deferred, and that it'll be sometime in going into the second quarter of next year that we start to get greater clarity on these issues, which will improve business and consumer confidence.
Are they optimistic for a big bargain, considering that if we kick the can down the road now, that's exactly when we're going to have this debate again, right? Is in the end of the first quarter, beginning of the second quarter.
I would say that on balance, our panelists are optimistic about some sort of a clear outcome emerging. But again, it'll be emerging, I think, gradually during the course of 2013, with some significant improvements occurring between the first and second quarter of 2013.
Most noteworthy I found was how important housing is back now, back in the front. How important is that to have housing and construction back adding to growth as opposed to being a drag?
Oh, I think that housing is very important, especially when you consider that really, in essence, our whole financial crisis was linked to the housing market. Our panelists suggest that residential investment will grow at about 12% next year. They're forecasting some improvement in housing starts next year. And also they forecast that home prices will increase 3.5% next year, which is a real improvement from the 2.9% drop we saw in 2011.
But
so this is definitely a good sign.
But they don't forecast that dropping down to consumption. So consumer growth is not going to be all that robust, despite the fact that we're seeing home prices grow again.
That's right. Our panelists are forecasting relatively flat consumption growth at about 2%. Some improvement in certain areas like light vehicle sales. That increase will continue over time. But really, in terms of, purchases other than, houses or light vehicles, consumption is expected to be relatively flat.
Moderate, stable?
I think part of the moderate and stable. I think that part of the reason why we're likely, on the part of the panelists, to see continued improvement in the housing market is that mortgage rates, panelists expect, will continue to remain low.
We'll leave it there. Nayantara Hensel, she's the chairman of the National Association for Business Economics.
Thank you very much, Tom.